Okay, now move on. We want to look at unqualified audit opinion, but with the emphasis of matter. Okay, whereby, as I mentioned earlier, everything on the financial statement is true and fair. But however, you believe that there are certain information or certain facts that from the findings of the company that you would like to highlight, okay, for the readers of the auditor's report. Hence you want to put as a paragraph inside your auditor's opinion, or perhaps in the disclosure with the detailed explanation in the disclosure to the notes of the accounts. Okay, so this is where another type of auditor's report where you have emphasis matter. Okay, for the emphasis matter, before that, okay, for the unqualified audit opinion, normally you have a template, okay, because very much the sentences that being used, okay, the terms that being used normally is very common, is very standardized. Therefore, most of the time, we do have a template, okay, for the unqualified audit opinion. However, whenever you have the emphasis matter, definitely the facts is not similar every year for every company. Hence the sentences or the information that you want to the wording that you use would definitely would be something that not the common one, whereby it will be non-standardized. So for this, okay, you have to decide as an auditor, you have to decide how you want to put the information and everything and so on. Of course, when you disclose, okay, you also must ensure that there is no like a biased information. There is a very positive or kind of unbiased statements that you put in the financial statement. Okay, uh, so what would normally happen is that example of the causes, okay, of the that cause auditors to put the emphasis matter is actually, for instance, like the non-consistency of the accounting standards or accounting principle that being used in the FRS. For instance, everything is okay, but then during that year you change your what is this? The depreciation policy. Okay, therefore there are some significant implications that affect on the financial presentation of the net book value, okay, of the accumulated depreciation. Hence, you want to highlight, okay, these are the changes that happen in the company during the year. So you can just highlight and putting by the emphasis matter. Okay, so it's not like that one is actually wrong, but it's just to highlight. Okay, that's why you want to emphasize. Alright, because sometimes during the COVID, okay, the company is not actually doing very well, but you still believe they can actually meet, they can still sustain their business, but there are possibility maybe in the near future more than 12 months, if they do not do anything, or in certain cases perhaps they will actually have an issue of going concern. So if you think that you want to highlight that, also that would be the one of the possible areas where could be included in the emphasis matter. Okay, and sometimes you have the so it's actually normally auditors have to decide, okay, it's involve auditors judgment, what kind of information that actually you want to include in the emphasis matter. Okay, these are also another example of emphasis matter, whereby you have the existence of the material related party transaction, intercompany balances, or intercompany transactions, or any significant subsequent event that happened post the balance sheet date, or okay, of post financial year end date, alright, or any information that would have an impact which actually happened this year but did not happen last year, so they have a significant differences in terms of the comparative figures, or perhaps there are major catastrophe, like for instance recently you have a big flood affected your business, so you want to highlight the impact of that on your financial statement where you lose all your products, okay, like last recently Giant Shalam, okay, when during the recent flood, it's all like basically all inventories that you have in your store is actually gone. Okay, cannot be, I mean you really have total loss, okay, total loss for, so it will be like significant loss for the company to report in the financial statement. Okay, so in that case you want to highlight, so these are some of the example that could be as a emphasis matter. So normally, in addition to the existing sentences that normally we have in the templates of the unqualified audit opinion, you would actually add on a paragraph or two. Most of the time, it's only one paragraph. But of course, if you want to explain in detail, then normally you will put a reference to the notes to the accounts as part of the disclosure. Okay, the next one we are going to look at another type of the audit opinion, whereby it's talking about qualified audit opinion, adverse, and also disclaimer audit opinion. So normally what would happen when we would actually issue the qualified audit opinion? Okay, qualified audit opinion, normally you have an issue. Again, it goes back to the auditor's judgment to decide uh, based on the materiality level, based on the impact or to the overall financial statement. Okay, so how would you actually decide whether it will be a qualified audit opinion or it will be another type of audit opinion? Okay, so if you look at the left hand side, okay, you have here financial statement are materially misstated. Okay, that means they are really significant misstatement happen in the financial statement. So do you think that you want to, of course you can verify it, okay. So you want to decide, you decided that it will be the qualified audit opinion because it's material but it's not very pervasive. Okay, because if it is pervasive, then most of the time you would actually go for adverse opinion. Okay, so this is straightforward that when whoever the reader read, then they know already this particular company financial statement uh, have a significant material misstatement on their financial statement. Okay, and then if let's say you are actually having an inability to obtain sufficient evidence, okay, so in other words, there is a limitation of scope, meaning that you want to, because as an auditor you are allowed to access any single thing, okay, any information, any records, all right, any documents for you to substantiate as part of your audit evidence. But there are cases whereby you cannot get all those evidence, so you are being restricted, you are being limited by the client to get access to certain information, certain evidence, and so on. So normally when there is a limitation of scope, but if let's say the impact is not that pervasive, and most of the time you might just issue qualified opinion. But if you think that it is actually upon overall assessment of the company, whereby you have the significant impact, okay, whereby you cannot justify, all right, you cannot justify for certain part, so the rest of the financial statement you can justify, then perhaps you want to go for a disclaimer opinion. So it actually depends on the auditors, okay, depends on the auditor. You actually putting the disclaimer statement, everything on the financial statement is okay except for this particular item where we cannot verify because there is a limitation of scope in gathering the audit evidence. Okay, so qualified also means that everything is true and fair except for whatever paragraph that whatever information that being highlighted in the paragraph before opinion. Okay, so it would actually highlight, okay, a paragraph that would actually highlight what are the problems that the members need to consider to look for the, okay, in that particular audit opinion. Okay, so adverse means that you cannot come to the disagreement, cannot come to the one particular agreement how to treat, because sometimes you have like significant adjustment, all right, okay, really proposed by the auditor, but after a while you decided that you do not want to follow suit the proposed made by the auditor. Hence definitely it would actually reflect, okay, the overall financial statement is actually not true and fair view. So the last one is a disclaimer, whereby normally being issued due to the scope of limitation, meaning that limitation in getting the access to the evidence. So most of the time, okay, whether we want to go for qualified audit opinion, whether we want to go for adverse or we want to go for disclaimer, it's very much depend on the materiality level and also pervasiveness. Okay, what is Okay, this is also further explanation when we should go for scope of limitation, when we should go for a disagreement. Okay, talking about materiality, if you still remember, materiality level is actually determined during the audit planning, and it is actually applied throughout the audit until even the end of the audit reporting, where you want to decide. You already finalized your financial statement, you already finalized about the errors or misstatement that you have found, all the adjustment has been made, okay, and also finally the overall decision to make your audit opinion. Okay, so there are three levels that materiality that being used. Okay, normally if the amount is immaterial at all, okay, if there is any misstatement, if the amount is immaterial and you believe that overall is still true and fair view, so most of the time you will stick to unqualified audit opinion. But if let's say the amount are material, okay, but do not like overshadow, okay, that means the rest you will still can say that the rest are okay except for a certain item on the financial statement. Then perhaps using that you want to issue qualified opinion with the emphasis method or except for paragraph. Okay, but of course, if really material is really pervasive due to the disagreement, okay, or due to the what's this limitation of scope, hence you would either go for disclaimer or adverse opinion. Okay, so this is actually the relationship summary of the relationship between materiality level to the audit opinion.